also a market for a new capital that will be traded for a longer period and a place for a company to raise funds for their operation, such as business expansions, modernization, and so on. Through this market, a company can also go public by changing their private capital into public capital and issuing their security to the public. Example, company XYZ who wish to enter primary market through an IPO will contact a firm that will act as underwriter. A finalized statement and prospectus is filed to appropriate governing and regulatory bodies. Once the statements and initial stock issue price is approved, the company is then able to proceed with its IPO. After a company IPO, its stocks are considered to have entered the secondary market.
So now I will be explaining on what is secondary market. Secondary market is where investors buy and sell the securities that they already own. And secondary market consists of equity as well as the debt market. The key products of secondary markets are equity shares, preference shares, bonds, and as well as treasury bills. Whereas the examples of secondary markets are New York Stock Exchange and Nasdaq. So now I will be explaining on the process of secondary market. Security issued by a company for the first times are offered to the public in the primary market. Once the IPO is done, the stock listed are then traded in the secondary market. The main differences between the two is, in the primary market, an investor will get the security directly from the company through the IPOs, while in the secondary market, one will purchase the security from other investor who is willing to sell the same. For example, Susie's company decided to sell 500 million in new stock. The bank will find an institutional buyers to purchase the stock in a massive block. This is what you call the primary market. Minutes after the primary sales take place, some of the buyers decided to sell their shares on the secondary market, which is aiming to make a profit. This happens on a public exchange where any size of investor may involve.
Differences between primary market and secondary market. The securities are formally issued in a market known as primary markets, which is the listed or recognized stock exchange or trading, which is known as a secondary market. The prices in the primary markets are fixed, while the price may be vary in the secondary market depending upon the demand and supply of the security of the traded. For example, in the primary market, the price of security is 500,000, while in the secondary market, the price of the securities may be more than 500,000. At the primary markets, the investor can purchase the shares directly from the company. Unlike in the secondary markets, investors buy and sell the stock and bond among themselves. Investment bankers do the selling of the securities in case of primary markets. Conversely, brokers act as intermediaries while trading in the secondary markets. Fifth, in the primary market, securities can be sold only once, while it can be done in infinite number in a secondary market. 6. The amount received from the securities are income of the company, but same is income of the investors when it is in the case of the secondary markets.